welcome to BloombergQuint. Joining me today is Mr. Vikaash Khdloya, Deputy CEO and COO, Embassy REIT, to talk about the company's performance in the last quarter, as well as the future of commercial real estate in these uncertain times. Thank you so much, Vikaash, for joining us.
Thank you, Ashwini, for having me over.
Sure. Let me begin by asking you about the company's performance. Now, quarter on quarter, if we see the numbers, in terms of revenues, we don't see any significant change, although the leasing has increased compared to the last quarter. So if you could take us through some of the significant changes or findings from the quarter gone by.
Sure, Ashwini. So, Q1 for us was another good quarter. The performance remains resilient, as can be seen from the numbers. So let me take you some of the stats. One, our net operating income actually grew by 36%. The recent acquisition of ETV reflects into these numbers, and hence it showed how accretive the deal has been. We have declared a distribution of 535 crores, of which about 80% is tax-free for unit holders, so another huge positive. And behind these two numbers, really what's happening is that the portfolio has been pretty resilient given the overall environment. Our rental collections have been strong at over 99%, one of the best in the industry. And also we've seen positive leasing momentum despite the second wave related lockdown and restrictions. So during Q1, we actually leased 5.5 lakh square feet across 9 deals, despite all the decision making being just pushed out to the next quarter. So I think all in all, our quality portfolio, the long tenure nature of the leases has reflected in both the numbers, with NOI being up, as well as occupancy, which has been pretty stable at 89%, same levels as last quarter. So we are very pleased with the results, and we think it's resilient, and we see it continuing going forward.
Right. In terms of the occupancy, as you rightly pointed out, that it has remained same compared to Q4 at around 89%. But if we compare it to Q1 of 2020, FY 2020, we see that there has been some dip of around 2 to 3%. So if you could tell us what is tenants who left, and what sense are you getting from your existing tenants about renewals or new space? What is that you're sensing from them?
Sure, Shri, that's a great question. So let's just start from the early part of last year. So when the first lockdown happened, there were a lot of sectors like the hospitality sector, like the retail occupiers, like the aerospace industry, which was massively impacted. And in our portfolio, we had about 2 to 3% of occupiers who were directly impacted by the COVID related uncertainties. So obviously that resulted in the occupancy going down from 92% to 89%. However, given the fact that we at Embassy REIT have over 190 occupiers, the portfolio has remained fairly stable. And in fact, over 70% of our occupiers are from the technology sector or the global captives, the two sectors or segments which have seen the maximum growth and which are seeing global trends on multi-year revenue growth and multi-year hiring. So we remain very positive as we move forward. Of course, right now the focus is on employee vaccination and ramp up back to offices. But given the underlying fundamentals, given the fact that our core customer base, which is the technology sector, which is the global captives, the large banks and financial services, and they continue to grow, they continue to hire more people, we remain very positive that as people ramp up back to offices, we'll see more leasing traction and occupancies will start inching upwards to what we have seen pre-pandemic at around 95-97%.
So what percentage of workers are currently there in your parks? And you must have had conversations with your tenants. What sense are you getting? Like, by when can we see the workforce coming back? I know it's quite contingent on on vaccination and the third wave, but still, what is the sense that you're getting from them?
Yeah, so, when we started off early Jan, March, we were seeing a steady increase in the number of employees working at our parks. So let me give you some stats. In early April, we had about 25,000 people working from our properties across the country. when the lockdown happened, the second wave, due to the second wave in May, that 25,000 number actually went as low as 9,000. And now again in July, we've seen a steady ramp up back, and we've seen numbers of around 17,000 employees. So, what the way we are looking at it based on our conversations with occupiers is that today, number one focus remains vaccination of the employees. And occupiers are now starting to plan the ramp up back to work starting October of this year into December. So we actually see a lot of steady and scale ramp up by the last quarter of this calendar year. Just to again give you some stats, at Embassy REIT, we have vaccinated over 10,000 of our frontline workers, and we have supported our occupiers, over 140 of our occupiers who are undertaking vaccination of their employees based on the infrastructure and the vaccination centers that we have set up at our parks. So based on what we have been able to gather from our occupiers, about 110,000 people, which is their employees, have already been administered the first shot. So I think it's only a matter of time as more and more employees get vaccinated, as the second doses are administered, we'll see a more ramp up back to offices, which will definitely result in positive momentum going forward.
But any timeline that you have in your mind, like that you have heard from them, like by when can we see that? Like if the vaccination pace continues as it is, as most of the corporates have taken the plunge and are vaccinating their employees. So by when can we, actually see people coming back? And, the sense that you're getting from work from home also, like what are you hearing on that front as well?
Yeah, sure. So, a lot has been said about work from home, but basically, given the demographic in India, which is young population, with limited social and physical infrastructure at home, it's been now put to rest the debate that, work from home may be a phenomenon. We think while there may be some flexibility, office is a necessity. We have heard similar commentary from some global business leaders as well. And, based on our own interaction with both our occupiers as well as the employees working on the park, all of them are keen to get back to offices. Again, for career progression, collaboration, mentorship, all of these require people to work together in a very collaborative environment, which a physical office space can provide. So, the work from home would not be a long-term trend. Of course, there will be certain flexibility. This is also what we are seeing in some of the other countries which are at an advanced stage of vaccination. We're seeing more and more employees being requested to start coming back to work. We think that trend will also be followed by in India. We are estimating the ramp up in vaccination to pick up in the next couple of months, and hence we are optimistic that the quarter October to December is when we see employees ramp up back to work. And now we'll have to just see the pace at which the vaccinations happen. But one thing is for certain, it may just be a timing issue, but both people working out of offices and as well as that being reflected in leasing demand, those we believe is definitely going to happen. And again, the main reason we say this is because today hiring and retaining talent is the number one priority for most organizations, right? Given especially in the technology sector, given record business wins and deals, and the demand for talent, and offices act as magnets to attract the talent and retain the talent. So, from an occupier perspective, they really need to provide the total business ecosystem to attract the talent, which they really need to execute on their plans. So that's why we think it's very positive as we move forward, especially for grade A office owners like ourselves.
Right. And also talking about this trend, also another trend that was spoken about was dedensification. And because, now a lot of social distancing norms and other norms are in place, and that's why dedensification of office spaces was spoken about. So have you all heard from your existing tenants when it comes to renewals? Are they also planning to offer larger spaces?
Yeah. So one, the kind of occupiers that we cater to, which is basically global large technology companies or the captives, they've always, the number one priority again, from a space perspective for them was, a quality ecosystem. While we did see density really going down to as low as 65 or 70 square feet per person, I think for the large quality occupiers, one, it always was in the range of 100 and 120 square feet per person. And some of these occupiers, especially the IT services companies where the density really went as low as 65, 70, now we are hearing and based on our conversations that they want to kind of have more space per employee, and they are factoring that in the new growth space that they would want to take up. Now, how they remodel existing spaces which have the lower densities, that we'll have to wait and see. But definitely, dedensification is one of the aspects that will play out. More importantly, again, that is linked to employers figuring out how they can provide collaborative work environment to the employees, how they can ensure that the wellness, the health and safety of the employees is taken care of. And I think a lot of focus is on that. So big picture from our perspective, that is that is the playbook that we've always been focused on. As Embassy REIT, we have highest quality properties. The wellness, health and safety of the employees working from our properties is our priority. We have done a number of initiatives for that. And I think as employers and our occupiers start looking to get people back to work, we will disproportionately benefit given our product offering, which is the total business ecosystem. So definitely dedensification will play out, as well as need for higher quality office space.
Right. Also, now coming back to your business, so in December you acquired ETV, and before that you had also acquired, I think in October, Embassy Tech Village, and that I think has shown a significant uptake in your net profits for this quarter. So how is this acquisitions going to impact the distribution, and any future plans of acquisitions for you?
Sure. So the Embassy Tech Village deal, the 10,000 crore deal to acquire Embassy Tech Village, which is in ORR Bangalore, was a transformational acquisition for us at Embassy REIT, right? Just if you take the numbers or Q1 numbers, while our NOI, the net operating income, was 621 crores, ETV alone contributed about 150 crores to the NOI. So really, ETV has had a significant impact on our performance in a positive way. And just in terms of percentage, 24% of our NOI for the quarter is being contributed by ETV. Similarly, if I were to speak of the distribution numbers, I mentioned earlier that we've declared 535 crores distribution in Q1. Again, ETV contributed over 130 crores of that 535 crore distribution. So about 24% again. So I think ETV has played out the way we had expected when we were undertaking the acquisition. It has been accretive both to our operating income as well as to distributions. And this is great because it benefits. As we look forward, one, we see REIT as a vehicle of, of capital market vehicle. It's a vehicle which is suited for both growth, both organic and inorganic. So on the inorganic front, definitely we will pursue further acquisitions. It has to be accretive, it has to help and be of the similar quality of a portfolio. All of that criteria we will apply. But definitely with our leverage as low as 23%, which is probably one of the lowest in the industry, we think we have significant ammunition to go out there, raise capital to fund our inorganic growth pursuits. Again, we'll have to keep evaluating opportunities. We will be deliberate, but we again want to be disciplined about the way we go on the acquisition front. So definitely, yes, we will pursue opportunities. We are looking at some of them now, but on the timing front, we'll have to see how it progresses as we move forward.
So any more acquisitions for this financial year? Anything in pipeline?
Yeah, so as we speak, we have about 320 lakhs square feet of pipeline. Again, by pipeline, I mean opportunities where we are staying close and seeing how it progresses. One of the great advantages we have is the right of first offer from our sponsors. So that put together with what pipeline we have based on our partner network as well as third-party opportunities, on a total basis is about 320 lakh square feet. So we are keeping a close track on those opportunities. Now we will see how it pans out, based on the numbers, based on the timing, based on the asset. We will take a call on acquisitions. Definitely, we see this as a significant avenue for growth for us. So something that we are working on.
Right, and talking about the REIT regulation, SEBI has recently relaxed the retail lots. In that regards, how do you see this benefiting Embassy REIT?
Yeah, I think SEBI has done a fantastic job, right? Starting from the REIT regulations itself, the way it's set up the governance and the transparency. And recently, as you mentioned, SEBI has come out with a decision at its board meeting that the trading lot size will be reduced 1:1, which basically means that REIT units can trade on par with equity. You can go and acquire, go and purchase one unit or one share of, let's say, Embassy REIT at 360 rupees or whatever the prevailing price is, and participate in the commercial real estate growth story. Earlier, there was a minimum threshold of 50,000 or 200 unit lot size. And that now SEBI has reduced it as low as 1 unit. So whether it is a millennial or a senior citizen, they can just go out there, acquire 1 unit of Embassy REIT, and still participate in this commercial real estate growth story, which we believe there's tremendous potential. The way the fundamentals are looking, the way we are seeing consolidation of demand to better quality parks as well as declining supply. So we think it is great. Again, SEBI has done a number of other initiatives which will also help the overall REIT product, and taken together with the trading lot, it helps in improving the liquidity. It will help in better price discovery, all of which benefits the retail investors. So I think it is a great move, and we will definitely see more retail participation going forward. In fact, already since the time we listed till now, we have seen over 3 times increase in the retail unit holder base that we have. And this is only going to go up as we keep seeing more positive outcome and delivery of the business, as well as the trading lot decision by SEBI.
Right, that's good to know. Now, coming back to your tenants and your leasing, I just wanted to understand in this coming year, like in this financial year, in terms of million square feet, how many leases will be expiring?
Yeah, so this year we have about 19 lakh square feet of leases which come for expiry, and again these are based on contracts, and it really follows the way the contracts are set up. So yes, this year we have about 19 lakh square feet.
And any conversation with these existing tenants about renewals, or are companies still at that pause mode and they are not ready to renew the leases yet?
Right. So in fact, actually, we already renewed 4 lakh square feet of those leases I mentioned in Q1 during the second wave lockdown. Again, with large technology companies demonstrating that they want the physical office space and want to continue, and 2 want to grow with us. On the balance, some of them will be exits simply because we'll always see some churn in business, which is part of what we call business as usual. The positive thing for us is, on this leases that I mentioned, we have over 70% mark to market. What it basically means is the in-place rent, or the rent currently that we are getting from these leases, is significantly below market. And as these leases come up for expiry, we have the ability to push rents back to market. So we actually see this as an opportunity to enhance operating income to the benefit of unit holders. Of course, given the fact that the focus is right now on employee vaccinations and ramp up back to work, and given we think demand will really rebound in a big way early 2022, there may be a timing gap of next 1 or 2 quarters and filling up these spaces once these are vacated. But overall, it gives us an opportunity to enhance the rents and also get new age occupiers, undertaking sophisticated value-add services and who have higher propensity to pay rents.
Right. You have, in fact, achieved some kind of rent escalation in this quarter as well, right? For the leases which were where your contracts were renegotiated. It. Any demand from the occupiers with regards to the current circumstances? Any demand for some kind of a negotiation that you have entered into with regards to maybe less rent or anything that they have asked for?
So actually, the kind of occupiers that we cater to, their decision to lease or not to lease is not a decision on rent. And again, rent is really not a significant proportion of the overall costs. So just to, give you some stats, overall rent is about 3 to 5% of the total cost. The reason they are in India is to access the talent, the STEM talent, science, technology, engineering, mathematics talent that India can offer. That is the real reason they are in India for. It's not for cost savings. These are really large global technology and financial services corporations. So given the fact that rent is not the key for them, but talent, what automatically flows is if we are able to provide them with really high quality work environment, then they are willing to pay those rents. And in fact, we have been able to command a premium on market rents. So during the lockdown, and based on our experience over the last many quarters, one, we've seen close to 100% rent collections. To all the rental escalations which come up due based on the contract, we have collected a full 100% of that. So again, last year about 84 lakh square feet of space came up for escalation, increase in rent, and we collected those increases on every single of those 84 lakh square feet space. Similarly, this year about 77 lakh square feet comes up for rent increases of about roughly 13%. Q1, we are fully on track. We've collected all the leases, the 22 lakh square feet that fall due, a full 100% of that. So again, I think the conversation today with occupiers is not about rents, or it's not about, can we give a discount? I think the global occupiers understand and are willing to pay for quality spaces. The conversation today actually centered around how can we as landlord help them in their efforts on employee vaccination and in their efforts on providing a really safe, secure, and wellness-oriented environment as they bring people back to work. And I think that is the area we are focused on, the area which adds most value to our customer base. And definitely we think it will lead to more business, more space take up, and to cater to the growth of these companies. So all in all, we are very positive, simply because office is a key tool for them to attract talent.
Right. And I just wanted to check also that in terms of, you have also mentioned in your investor presentation that your RFPs or request for proposal has been very active. So any new asset classes where you've been approached? Because right now, because of the pandemic, it's not just IT, but there are other companies also which are doing well, like data centers and others. So have you seen any interest from these kind of companies as well?
Yeah, so while we see interest from a lot of segments, but our core customer base, as I mentioned, remains the global technology companies and the global captive centers. Now, again, to throw some light, throw some numbers. Globally, what we've seen is that the technology spends are going to increase by 18% over the last 5-year average, and these numbers are in trillions. Similarly, the global captive centers, which have set up base in India, their revenues are expected to grow 2 to 3 times over the next 4 years. So, we are seeing tremendous growth. There's a lot of demand for outsourcing. There's a lot of demand for digital transformation, cloud, analytic related work. And these are the kind of works that really India stands out for, given its tech talent. So we see huge opportunity in this core customer base of ours. And the kind of demand that we're really seeing is from these companies, whether their companies have not set up their operations in India, they want to set up new base, and existing companies, of course, continue to grow because of the digital transformation journey, because of the investments globally that companies are making in digital and cloud-related activities. So I think that will continue to remain our core customer base. We will evaluate opportunities on data center on a case-by-case basis, but we continue to be focused on our core segment, which is the technology related occupiers.
Right. Lastly, I would like to understand from industry perspective, like how do you see the coming quarters for this financial year? Because as you know, right now, a lot of companies have put their new leasing plans on hold, and expansions are kept on hold, which is overall we have seen a decline in absorption. So going ahead, if the pace of vaccination continues as it is, and we are able to vaccinate more people, how do you see the office market shaping up?
Sure, Ashwini. So, in summary, I would say that we are expecting strong demand revival in starting 2022, and simply that will be driven because of India's place in the global technology industry. Now, if you look at some of the numbers I mentioned earlier, one, globally, the technology spends are massively increasing. And in fact, what COVID pandemic has done has actually expedited the digital transformation journey of many companies, right? By at least 3 to 5 years. And what that means is that we are seeing record number of deals being won by Indian technology companies, and record amount of work being outsourced to the global captives set up in India. All of that is translating into hiring. We heard about the recent report by Kotak Research on about 3.5 lakh people estimated to be hired in FY22. Again, almost double of the average hiring over the last 5 years. And what all of this will mean is that there will be significant demand for office space, especially the kind of product that we offer, which is a total business ecosystem with all the health, safety, wellness initiatives for the top global occupiers. We will see demand consolidating disproportionately to our benefit. So if you see all the trends that's happening, and again, these are not cyclical, these are structural shifts. We think it will mean more demand for our kind of product. Supply in the market is already declining. It's declined by 25% as per recent research report by CBRE. We actually think it will decline even further given the dislocation and the liquidity concerns in the market for developers today. And both demand as well as the declining supply put together provides us a fantastic opportunity for pursuing growth, whether it is by construction of our, whether it is by construction on our existing parks, whether it is the acquisitions that you mentioned, or simply the lease up and achieving the mark-to-market trends on our existing portfolio. So we think the next 2 quarters, the focus will be on employee vaccination and on ramping numbers back to work. We think the demand definitely is going to rebound in early 2022. It's more of a timing issue. Of course, it's subject to a third wave or some other unknown issue related to the pandemic. But all logic, whether it is the record investments in technology, whether it is the hiring, whether it is the supply that I mentioned, all of that point to the fact that demand will rebound strongly in the next year. So we are very positive. We think it's a matter of time, and that is the reason we continue with our construction that we had already initiated pre-pandemic. We have not stopped it to ensure we are geared up for the growth and for the demand for space. And we are very positive and remain committed to our business strategy.
Right, and we wish you all the best for all your future plans. And thank you so much for talking to us on BloombergQuint.
Thank you, Ashwini. Thank you for having me over.